How fintechs are disrupting Australia's traditional mortgage business. The conventional mortgage industry is undergoing rapid change. In today's economy, customers do transactions via new channels such as apps, and as a result, the financial technology revolution has accelerated. Customers now have a multitude of options due to the expanded and safer use of application programming interfaces, commonly known as APIs. Let's find out more about fintechs and how they're disrupting Australia's traditional mortgage business. Please subscribe to the channel. I'm Sage for Kalkine Media. Fintech businesses have recently intensified competition in the most lucrative section of Australian banking, mortgages. For years, traditional banking behemoths governed the $1.9 trillion Australian dollar housing loan industry. Mortgages account for the lion's share of the lending portfolios of the big four banks. However, the fintech businesses are gradually posing a threat to these financial behemoths. The primary reason for fintech's recent success is that the younger generation are more open than ever to banking online, creating an opportunity for the fintechs. Let's take a snapshot of the Australian fintech industry. The fintech business in Australia has recently received a record investment, resulting in a considerable increase in revenue streams. And according to the estimates by KPMG, investment in the Australian fintech sector hit $890 million in the first half of 2021, up 60% from the first half of 2020. It comprised an investment of $89 million by Judo Bank and $64 million investment by mortgage fintech business Athena Home Loans. As the world moves towards digitisation, companies are targeting young home loan seekers, and this is being accomplished, however, with proven support from traditional banks. A main example comes to mind. Afterpay intends to sell mortgages this year through its newly released banking app targeted towards Generation Y, females in particular, and Gen Z. It is being funded by Westpac. Similarly, Up's app will target youthful clients in 2022. Up was formed in 2018 as a collaboration between Feronia Software and Bendigo and Adelaide Bank. It has a customer base of over 400,000, and the majority of whom are young Australians. Another example, TikTok, a rapidly developing digital mortgage startup funded by Bendigo. Additionally, non-bank lenders such as Nano Digital Home Loans and Athena Home Loans have recently flourished too. Will digital mortgages become the norm in the future? Even while fintech startups have done well, there is still a long way to go. And according to a 2020 survey conducted by Finder.com, more than half of Generation Y and Generation Z are still willing to visit a branch for a mortgage. Traditional banks have also picked up on the warning and are rapidly innovating. Commonwealth Bank is a prime example, and the ANZ Bank are exploring the prospect of a 10-minute mortgage in 2022. Additionally, Apple and Google intend to enter the payment space via their respective digital wallet apps. The verdict. While it may take some time for technology-based mortgage apps to gain the market share, digital finance has established itself as a major threat to the banks, and it can only help the customers. Thanks for joining us in the report. If you like the information, let us know by liking, sharing, commenting on the video below. Subscribe to the channel, and if you press that bell icon, you'll be notified every time Kalkine has a new video. But for more articles like this, head to the website kalkinemedia.com. I'm Sage for Kalkine Media.